drive you home.
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got 18 minutes to go until we wrap up this trading day on this Tuesday, October 15th. Carol Massar along with Tim Stanovic live here in our Bloomberg Interactive Broker Studio. And as Charlie mentioned, as Bill Maloney mentioned, we are seeing stocks hovering near their lows of the session. Taking a look at Trump Media, that stock, too, is down in today's session. I'm just bringing it since we did see our John Micklethwaite have an in-depth conversation from the Chicago Economic Club with the former president, talking about a lot of different policies. And we do see Trump Media down about 14%, so hovering near its lows of the days.
Yeah, interesting.
Yeah.
Shares slid as much as 12%. Well, that was an earlier article. It
was down 60% at its lows today. Yeah.
Wow.
Yeah.
And it was briefly halted for volatility.
Yeah.
Okay.
So just interesting. Just on the backdrop of that conversation,
Yeah.
I bring it up, and that's why it is relevant. Let's talk the markets.
Yeah, let's see what Jason Bronchetti has to say, Chief Investment Officer at Lincoln Financial, joining us from Pennsylvania. Jason, good to have you with us this afternoon. How are you watching things? I mean, we hit a new record yesterday for the S&P 500. We're seeing chip stocks really weigh on the trade today. A couple different stories out about that. We talked about that throughout our program. What's the view from your perch?
Yeah, well, first of all, thanks for having me on with you again. It's great to be back with you. And I think, as we think about the market, I mean, today's a choppy day, but the last time I was with you, we were talking a lot about the economy and the market backdrop and kind of where we might be headed. And I think there was a fair amount of debate at the time as to, whether we were going to be in a soft landing or a hard landing, no landing, and what that might mean for markets. And I think if we take a step back and think about where we are today, it looks like we're in this kind of soft landing category, at least for the moment. Growth is still positive, clearly. Q2 GDP coming in over 3%. Q3 is looking about the same. Inflation is approaching trend, and employment remains pretty healthy. So I think earnings are in focus, obviously, this week and last week. The banks setting a healthy tone. So I think the economic backdrop is looking pretty good. Now we're bound to see some volatility, and that's one of the top things that we've been talking about with folks, particularly as we head into the election here and as the Fed kicks off and continues its easing cycle.
Hey, Jason, you bring up the election. Former President Donald Trump saying his policies would inspire growth despite adding to the debt as he sought to assuage business leaders who worry his economic plans will fuel inflation. He says we're all about growth. He told that to Bloomberg News editor-in-chief John Micklethwaite earlier today, an interview at the Economic Club of Chicago. He says we're going to bring companies back to our country. Is there a Trump factor, though, in the trade? And here we are pretty much just hovering near our lows of the day. Is there some nervousness among investors about what a second term by Donald Trump might be?
I think anytime you're in the throes of a presidential election cycle, you're going to see volatility, and that's what we've seen. If you look back in history, markets tend to be pretty volatile during election years, leading up to the actual presidential election and the outcome there. That being said, what we have seen is that once we get through that, markets tend to be less concerned about the political situation as some of that cloud lifts. So whether it's concern about Trump, whether it's concern about Harris, or what those policies might be, I do think you're right that that's weighing on things, and we would expect to see that volatility and perhaps heightened volatility even up for the next few weeks. But once we get through that, what we've seen historically is really that in all but 4 of the last 24 elections going back to the 1930s, you saw positive returns for the equity markets during presidential election years. And the years in which 3 of those where we didn't have positive returns were those that were marked by crisis in 1932, 2000, 2008. So what I'd say is I'd expect to see more volatility for whatever reason, but once you get through that, wouldn't be surprised to see things firm up as we move forward from there.
Hey, there's, candidates on a campaign trail, and then there's, a president in the White House, and then there's also the Congress that goes along with it. Whether or not it's of the same party or of a different party determines what policies ultimately get done. How do you, who's better for investors? What president come November, come January, is better for investors in your view?
Yeah, I mean, we all have our views, but the reality is if you look back through history and you look at the 10-year annualized performance in the S&P 500 post an election year, whether a Democrat wins or a Republican wins, the returns have been about the same, about 11.2% annually for when a Democrat wins, about 10.5 when a Republican wins. And that's been the case since World War II. So I think that while we care a lot about politics and we care about the markets, notably near term, I think you're going to see volatility around that. But when you have the likelihood of some degree of divided government, the hard policy shifts are certainly less likely. And I think that that's more than likely the outcome in this case, that regardless of who wins, the clouds will lift and we'll see pretty positive returns over the long term. And so focus on, zooming back out, widening the aperture and being less focused on any given trade and more focused on what markets have done over the long term.
We're just focused on you like every other person out there who's focused on the folks who live in a swing state,
That's right.
Jason, because
There you go.
you're like the most
Pennsylvania,
important.
we're in the hotbed.
Yeah, every 4 years this happens to you, right? Where it's like you turn on the TV and
Absolutely.
every other ad. I did go to Georgia back in August, Carol,
And?
watched a little local tele. Actually, I watched.
I love watching local TV.
Yeah, local TV,
Oh.
national TV. I couldn't get away from the ads. Every other ad was for a political candidate.
I bet,
Swing
right?
state,
Can't be
big
avoided.
money being spent.
Yeah, I mean,
Absolutely.
right? Well, I don't know. I get what you're saying about like historically what happens, obviously in election years and coming after it. But when you do have, potentially a candidate who talks about increasing dramatically tariffs on foreign goods, doesn't you're a smart guy, like tariffs, like doesn't that make you a little concerned potentially?
Yeah, look, I mean, I think it's
An all-out
it's
trade war,
inflation.
right, would not be great.
Yeah. I mean, any kind of upheaval in that regard is certainly has the potential to be quite negative or stoke that inflationary impulse as well. I mean, I think when you look at what the Fed has done, we've gotten to a pretty good place in terms of the trajectory around inflation. I think any policies like that would be inflationary certainly should give some cause for concern as far as that goes.
And at the same point, both seem to talk about a lot of spending, right? And you worry about the
That's
deficit.
what I wonder. I wonder
Yeah.
also
Yeah,
what
I mean,
the
look,
bond
no-
market lets them do.
Yeah, exactly.
Yeah, I mean, nobody's really talking seriously about reining in any degree of fiscal spending. And so I think when we think about the short end of the curve, you're likely to see rates come down in the front end, just given the direction of travel with the Fed. And I think that direction is clear and the pace and the destination are a little bit uncertain. But the policies out there, kind of regardless of who wins, probably have the potential to be a little bit more long-term inflationary. I mean, my friend Henry McVeigh talks about we've been in this marketplace and this economic backdrop of 30 years of benign globalization, inflation coming down, interest rates going lower. I think when you think about the amount of debt that's out there and some of the policy ideas that are being floated, certainly have the possibility of stoking that inflationary impulse and leading longer rates higher over the longer term.
All right, good stuff. Fun to check in with you. Jason Burketti, he's Chief Investment Officer at Lincoln Financial, joining us from Philadelphia, Pennsylvania. All right, folks, just
What's
back.
next, Carol?